Good evening. This is Thursday, September 29th, 2011, and I wanted to do an update. I have not done one for a while. I've purposefully stayed away from making comments during the dramatic silver drop of recent days, but I think it's time to come in and make a couple observations. So thank you for checking in, and here's what I've got. You'll notice that we're looking at the SLV chart as a surrogate for physical silver, for spot silver. SLV, of course, is an exchange traded fund. The first thing to note is that our stochastic and our MACD are at extremes. You'll notice right here, they're at extremes, and that we have a little consolidation pattern going sideways. But let's back up a moment. Notice this decline here. I'm going to take and move that indicator that I've been using right over to about here. Depending how you want to measure, whether it's from this top or this point here, we have not seen the same numbers of dollar decline that we saw in the collapse back in May. Was it April or May? So that tells me we maybe have some more to go here. I would expect a formation something like this to start to take place, or we could just give this a pennant, which is a triangular shaped formation, and have it drop out of the pennant and go on its way down. I don't know obviously what's going to happen, but let's drill into this timeline a little bit more. We'll go to a 3-month view, so that now you can see this when we were making this sideways action. When we eroded this trend line, arguably this trend line would have been moved to here, but maybe not. Maybe it stays right here where it's got several valid points. Breaks through the trend line gradually, which is interesting, but then when it collapses, it falls like a rock. And as we know, this was a substantial decline in valuations. We've had a down day. Today was an up day. A lot of silver bulls out there are saying, oh, well, you've hit a bottom because of this and that. Frankly, I don't know how you can say that, and I don't say that. My comment would be that we don't know it's a bottom until we've established an uptrend. And an uptrend, of course, is higher highs and higher lows. So we need to start establishing something that calls itself an uptrend here. Otherwise, I think we have to be prepared for the continuation of lower prices. I don't think that it would be wise to jump in here, and frankly I'm out of this silver market here. I do continue to be interested in and want to acquire reasonably small amounts of physical silver proportionate to my ability to buy them, because I think there is a disconnect between physical silver and the paper silver. The disconnect is basically reflected in the relative scarcity of it in the local shops, which I hear partly through rumor and partly through observation. Online you'll see people talking about its unavailability, and at certain websites you'll also see that it may not be completely available. Silver may not be completely available. But it is out there. So whether we have a disconnect or not is totally hard to document right now, but I think we do. And I would suggest that if you want to add small amounts to your physical silver, or continue to add to your physical silver, probably not a bad idea. But we could see substantially lower prices. Where the bottom could be is anybody's guess. And if it went to $10, I wouldn't be shocked, because this is a market that's clearly under a great deal of pressure. The exchanges, when they change the margin requirements for impact in the markets, clearly you don't get this kind of dropping without one of two major things happening. Either sellers are selling like crazy, or buyers have simply gone away and sellers can't find anybody to buy. From the standpoint of the small guy, there are a lot of small people out here who will buy silver, and that may be a bearish sign. When the little guy is piling on, he's usually wrong. But the reality is prices are the reality, and this is what we've got at the moment. So I am staying away from trading the physical silver and excuse me, I beg your pardon. I'm staying away from trading the paper silver, keeping my physical, and looking at that as a long-term insurance policy. I feel comfortable telling other people that that's a reasonable path as long as you don't go crazy, and you can feed your family. Then buy a little bit of silver, set it aside, and keep doing it. Now the reality is we may never need that silver. It is, as I say, an insurance policy for me. There are those who say we'll be living in a silver-based economy where we're trading physical silver between each other for gasoline and groceries. Maybe. I don't know that, and I can't predict that. I think that's a little bit of a paranoid view of the future. But on the other hand, current government behavior gives us lots of reason to be paranoid. Will it ever get to the point where the roll of silver dimes that we hopefully all have tucked away is going to be used to buy the groceries? Nobody knows. So a good policy is to have that roll of dimes tucked away. But the reality is we just don't know the future. I just want to have a quick look at this, and on my way out here, I will take a look at UUP, which is a PowerShare Dollar ETF. By the way, SLV does not correspond exactly to spot silver. In fact, here's spot silver live at the moment from Kitco, which I recommend, by the way, is a great place to check on the live prices. The green line is the current pricing of silver here. It's holding above $30 on spot. Kitco.com charts livesilver.html. But here we are looking at freestockcharts.com. There is the dollar. There's the backing out, the recent action. We'll go back a year. We see the decline. We see the sideways movement. We've climbed above this resistance, which theoretically should now become support. And we will see. Somewhere in here, there almost looks like an Elliott wave move. Again, I think this is very, very unpredictable. And generally speaking, would be staying away from dollar betting for it or against it. The S&P, in my opinion, which we're looking at real quick again, has formed what I think is head and shoulders top. I've been saying that probably too much, but I believe it's a head and shoulders top. We look at QQQ, which is NASDAQ equivalent, something of a head and shoulders, bigger recovery, more volatile. But with the S&P, I think you do see this sideways consolidation. Frankly, I would expect to see another decline somewhat like this, maybe not as precipitous, but I would expect to see that decline. I'm positioning myself, frankly, to purchase dividend-paying stocks as this decline takes place. I'm positioning part of my very limited portfolio in the key stocks right now, and then I'm watching for this to break lower as an opportunity to add to that. I'd be very interested to hear if any people have other ideas on how to handle this current situation, but those are my observations, and I appreciate your listening. Thank you.